Um, Markets on Monday, pretty quiet actually. We have a European holiday across the board pretty much for Whit Monday, the day after Pentecost, so all the markets are shut, which is reducing trade to a certain extent even in the sterling markets. News overnight, dominated really by news that several of the Arab nations have cut political economic ties with Qatar, certainly for the time being anyway. It's happened before now. Interesting that Saudi Arabia is one of them. But they're claiming, as you can see in this headline from the Financial Times, that Doha's regional policies fuel extremism and terrorism, and they're basically saying they support the Islamist movements, which is not good news, especially with obviously what's happening, has been happening in the UK over the last 3 months. Markets last week, generally stock markets performed quite well. FTSE was pretty much unchanged on the week. That was the only one, not surprisingly, in light of the upcoming UK general election. But the Dow and S&Ps all tacked on between 0.6 and 1% gains last week. DAX 220 points high despite a strengthening euro. Same thing with the Nikkei, 490 points higher, 2.5%, despite a considerably stronger yen. The indices, certainly the US indices, particularly strong, not quite sure the exact reasons, but when markets go into sort of virgin territory where they're making record highs day in, day out, there's nothing really much to stop them. There's no obvious stopping point apart from whole numbers, I guess. The VIX is back at a 20-year low again. It's not really a good gauge for sort of pinpointing a turn in the markets, but it basically means that the risk is raised should something happen to cause the market to turn, so you'd expect a considerably bigger move with the market as complacent as it is should that happen. Dollar, well, the euro was quite a lot stronger last week, up another 120 points, about 1.1%. Sterling up 0.5%, but again, in light of the election, it's not surprising. And Japanese yen firming another 82 pips or 0.75%. The reasons, well, last week we had non-farm payroll data. Despite a fairly good ADP reading, the non-farm payroll data was particularly poor, posted a poor number of new jobs in May. I think just 138,000 against 181 expected. The unemployment rate did fall, curiously, although this is partly down to participants leaving the jobs markets, but I think overall the report was disappointing, which added to the bearish nature of the dollar's move on Friday. Precious metals, not surprisingly, benefited. Gold up $13 last week, making quite a move on Friday. Oil markets, despite quite a drawdown in stocks, or slightly larger drawdown in stocks than was expected, still lower. $2 last week, just over $2 for both UK and US oil, Brent and WTI, which is just over 4%. Little bit surprising, but I suppose in light of some of the comments that we've heard from Russia saying that they are intending to up production should they feel that the OPEC cuts are not working and any members start to break any of their commitments to that. Of course, what interests us most here in the UK is the general election on Thursday, but I'll get onto that in a second. Let's have a look at the data and events this week. I've already mentioned that it's bank holiday across Europe on Monday. We do have have had, I should say, I'll refresh the screen so we can see it, the services PMI out in the UK, and also expecting the ISM non-manufacturing sector report from the US, which also is the services sector in the US. The services sector accounts for 4/5 of our economic output, so it's a lot more important than any of the other releases in terms of manufacturing. Okay, so that report has come out quite a bit weaker than expected. 53.8 we're expecting from the UK, 55.1 was the expectation. Anything above 50 is still very positive, which indicates an expanding services sector, but that might add a little bit of worry to the markets, expecting 55.1, so that's down 2 points from the previous reading at 55.8. The US number, as I said, out at 3 o'clock in the afternoon on Monday. Tuesday we have the Reserve Bank of Australia monetary policy meeting. We expect no change in rates there. The statement can be a little more impactful. But I guess unless you're up overnight, you only see the consequence of that when you get to your screens on Tuesday morning. Wednesday, well, crude oil inventories, I've already mentioned that. Stocks continue to be drawn down modestly, but the effect on prices has been a bit sort of contrarian, really, as indeed it was in the first 3 months of the year. Stocks were increasing and the price was going up. I've already mentioned the fact that Russia's threatened to up production if they feel OPEC production cuts are not having the desired effect and any members are breaking it. But I guess it's just not what bulls want to hear for the time being. Notwithstanding that, the news overnight about the Arab nations severing ties with Qatar has caused the price to lift somewhat on Monday morning. Okay, the UK general election, pretty key for sterling markets, to say the least. You'd be forgiven for thinking that the market seems very complacent about a Tory victory. I said you'd be forgiven because poll after poll has the lead narrowing. Theresa May seems to have run a pretty poor campaign. That's not just my view, that seems to be the general view. Although you could say the results justify the means, and I know one of our campaign managers, Linton Crosby, has a very good track record, but polls are very close, which seems odd bearing in mind how unpopular Corbyn has been. But the market still seemed convinced that the Tories will win. Bookmakers imply a 50 to 70 seat majority, at least that's what they were at the end of last week. If there's a hung parliament or Corbyn wins, I think sterling will fall sharply, gilts will fall sharply, more importantly equities will fall sharply, attention perhaps focusing to utilities that the potential Labour government would nationalise. And also the broader 250 stocks would really come under pressure. But for now, it seems almost a unanimous view that Theresa May will remain Prime Minister come Friday morning. I think that's far from clear as far as I'm concerned and the people I talk to. Anyway, apart from that, we have the ECB meeting on Thursday morning for their monetary policy meeting. Whilst I think everyone agrees that the Eurozone economy is accelerating, and that's been one of the surprises this year, the actual outlook for inflation looks fairly benign. The problem with benign inflation gives companies very little prospect of raising prices with the outlook so low, so that can affect investment, etc., etc. But I think Draghi may use Thursday to emphasize the risks of low inflation on the Eurozone economy, and that, I guess, could also help drive the euro back down again from what is looking like a more uncomfortable level, especially for the southern members of the union. Friday we have the final bit of data, really, certainly that interests us, manufacturing production from the UK. I suspect the market will be focusing either on a Conservative victory or a hung parliament with a possibility of a Labour SNP coalition. I know they've suggested that's not what they would do, but the latter just sounds particularly ghastly. But time will tell. That's Friday morning for you. Thanks very much. All the best.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.